Hi there, this is the story of Jim Alderson. Jim grew up in Montana and studied in Montana and began his early career in Montana. He studied at Montana State University in accounting and then opened up a small accounting practice in Whitefish, Montana. He began to attract several customers, and one of those customers was the local hospital, North Valley. And in 1984, Jim was offered a job as a finance officer. He continued to work there for 6 years and enjoyed employment until 1990 when Quorum, a child company of HCA, acquired and managed North Valley. So 2 months after Quorum acquired North Valley, Jim and another colleague were approached by a Quorum employee who asked if they had ever, or if they prepared two cost reports. Jim and his colleague were confused by the question, believing that maybe he was asking about a Medicare and a Medicaid cost report. And this Quorum employee then explained that no, one report was submitted to Medicare and the government that had the largest possible number of expenses. And the second cost report was prepared and kept internally, and it was much more conservative and helped them have an idea of what their reserve amount would need to be held at in case their report to the government wasn't approved. Jim and his colleague refused, saying that they had never prepared two tax reports for someone and they weren't about to start preparing two cost reports. Days later, Jim was fired. In the aftermath of his termination, several things in Jim's life changed. He could no longer afford to live in Whitefish, and so him and his family moved to Dillon, Montana, where he took a new job. They downsized to a smaller apartment, and they had to dip into their children's college funds. Jim kept thinking about that wrongful termination and filed a lawsuit where the Quorum attorneys accused Jim of phishing, and so he reached out to the former North Valley Hospital administrator and spoke with him about this, who agreed that it sounded like a fraudulent business. And this administrator advised Jim to look into key TAM cases, wherein he would file a lawsuit in behalf of the U.S. government. So he filed the draft of the lawsuit and submitted it to the government in December of 1992. And later in August of 1993, he hired Bordeaux, a former Medicare auditor, who agreed with Jim's case and was excited about their prospects. And so this was 3 years after his termination. They then were able to get a key TAM lawyer in 1995 who filed a complaint in Florida, which would be more sympathetic to their cause. And that's when things really started rolling. And so we need to look at how well Jim carried out the IMA statements of ethical professional practice. One standard in which Jim excelled at was that of upholding the integrity standard. Quote, it is the duty of accountants to refrain from engaging in any conduct that would prejudice carrying out duties ethically. And then another statement under the integrity standard, quote, abstain from engaging in or supporting any activity that might discredit the profession. Jim admired the accounting profession and pursued that career because he had an experience when he was younger where he saw the quality that accountants seem to uphold and cherish. And so he knew right away, even though he wasn't certain of that being fraudulent, that it just didn't sit well with him and his integrity that in which he enjoyed practicing his career. And so Jim did an excellent job in immediately stepping away from any practice that might be compromising his integrity. And in resolving ethical issues, Jim first tried speaking with the person that was involved. He didn't speak with the supervisor. He never got the chance. He was terminated, but he did consult with his own attorney. And so Jim did a great job in following the IMA SEP's rules.